I used to be a yo-yo investor. I would grow my money a little, then lose it all. Then grow, lose, grow, lose. I was so eager to have money for a down payment on our first house back in the 90s that I was buying when market was hot green, and I was panic selling when it was going through a slightest correction. Guess how this worked out for me? It didn't. That's when I realized that I have to become a strategic investor. So if you are an investor or want to become one, but really worry about losing your hard-earned money while investing, pay attention to today's episode because I will tell you why most investors, common investors like you and I, don't get rich. And I will also share with you 5 simple tips on how you can reduce investing risk and allow your money to grow while you sleep well. Hello, hello. Welcome to the More Money with Milan, a show that is kind of operating manual for creating your best rich life. I'm Milan Levis, holistic financial independence mentor. I help people have more money with less risk and less stress. Nobody wants that, right? But if you do want more money with less stress and less risk, I'll be glad to speak with you. So you can message me directly. And today, I want to offer you a gift, beginner investor toolkit that has, here's the link, giftfrommilan.com, that has 8 steps you can take to become a strategic investor. Okay, so now let's talk about the ways you can reduce risk while you grow your money through investing. 2022 was a really bad year for investors across all levels of experience, right? Inflation, which was at 40-year high, hurt economic growth, even though consumers were continuing spending. Corporate profits were damaged enormously, and miserable profits sent stocks sharply lower through the year, right? So growth stocks, shares of companies that are expanding their business quickly, that's the definition of the growth stocks, got hammered really hard because of their rising interest rates. For example, Elon Musk's Tesla was down about 70%. Meta, Facebook's parent company, also was down 64% in 2022. Amazon, Apple, and Microsoft, tech companies that have become staples for investors, took major hits as well. As a result, at the beginning of 2023, an average individual investor, like myself and others, an average individual investor was sitting on a lot of unrealized losses, which unrealized losses, these are paper losses that become actual losses once you sell your stock holdings. And because it's human nature to make assumptions about the future based on recent past experiences, almost everyone now expects the worst market trends to continue, with possibly even worse consequences. Yet the greatest investment opportunities often come when people don't want anything to do with stocks. When you hear doom and gloom from the media, when people are most fearful, when emotions drive decisions and choices. So I want to show you this little chart that I drew for you. And so let me know if you can see it. So that's the emotional, investing, right? So investors have optimism when the market is going up, they're excited, they invest like crazy, like I used to, and that's the greatest risk of loss when the market goes really hot at the top, okay? Investors become overconfident. And then when market starts going through correction, it starts with people feel denial, people feel regret, people finally feel fear and panic. And that's when the bear market swings. And that's when people feel despair. That's the greatest opportunity to invest. Okay, I just wanted to share with you this chart. So the emotional roller coaster ride shakes many investors out of the market when markets are going through correction. And like I said, I used to be one of these investors who were panic selling. And that is one of the main reasons most, especially individual investors, don't become rich, right? Because emotions cause people buy when market is at the top and sell when market is at the bottom. So the best way to reduce investing risk is to reduce emotional investing. Investing is an activity that requires you to use your masculine energy, right? Logic, rational, in order to be successful, so that you make rational investing decisions instead of emotional ones. So the good news is that today I'll show you how to manage investing risk by protecting yourself from the extreme loss and positioning yourself for the greatest gain. So here, the tip number one. Tip number one is diversify your assets. The secret to building and keeping wealth is diversification. In general, I like to have a mix of stocks, bonds, cash, real estate, collectibles, cryptos, precious metals, and other alternative assets in my portfolio. However, your investment portfolio's specific asset allocation must be adjusted annually based on the current economic conditions. So it's not set in stone what you have to have in your portfolio to be successful. It depends on current economic condition. And by the way, several studies show that asset allocation accounts for 90% plus, more than 90% of your investment returns. Asset allocation, okay? Not necessarily just choosing specific stocks and other assets. So finally, in any environment, diversification helps achieve better returns, and even more importantly, it reduces the overall investing risk. I don't know about you, but I don't like to be stressed out over my investments, right? I like to sleep at night. And I suspect you feel the same. So let's talk about tip number two. Tip number two is think long term. Long term. The short-term direction of the stock market is always unknown. Okay, nobody has a crystal ball. Even your best financial advisors don't have it. Okay, me neither. Even experts get it wrong more often than they get it right. That's the truth. Unless you are a day trader, which I don't recommend if you want to have more money with less stress, daily volatility shouldn't bother you. Okay, daily volatility of the stock market should not bother you. So don't get distracted by the market noise. Think long term. That's one of the aspects of strategic investing and also risk management. Okay, let's talk about tip number three. Tip number three is protect what you already have. Makes sense, right? Protect what you already have. Before you decide to grow your wealth, you've got to protect what you already have. The best way to do that is with position sizing. Now, what is position sizing? Position sizing refers to the size of a position, number of stocks, for example, within your investment portfolio. Or you can say it's a percentage of your total portfolio, or it's a dollar amount that you're using to invest in a particular stock or cryptocurrency or bond or whatever you're investing in, right? Particular dollar amount or percentage of your total portfolio. My simple rule of thumb is the maximum loss in a single position, whether it's a stock or ETF or crypto, should be no more than 2.5 to 5% of your total portfolio values, okay? 2.5 to 5% of your total portfolio values. So here's the thing, excuse me. When you limit your downside, you won't need to panic sell your assets at the worst time like I used to do, right? Because you're limiting your downside, you're limiting your losses, and you will sleep well at night. That's how I do it now. Okay, let's talk about tip number 4. Invest consistently. Life tends to get busy, right? We forget, we get distracted, we procrastinate. And consistent investing means investing money regularly. You can sign up for a direct deposit from your income into a taxable brokerage account. Okay, certain amount you can deposit directly. And I also want to remind you that I advise you to take, not advise you, I invite you to take an advantage of retirement plans like tax deferred accounts like 401k in the States or IRAs, right, if available, by allocating part of your paycheck to investing in your retirement accounts, especially if you get an employer match compensation. Okay. However, each tax deferred account has a maximum allowed annual investment. Okay. So if you do contribution to your tax deferred account, also known as retirement account, make sure that you double check how much they allow to invest in this account every year, because the amount usually is changing almost every year. Also, set up dividend reinvestment for your dividend paying stocks or funds or ETFs if you don't need the income right now and you want your portfolio to grow faster. All my accounts are set up with dividend reinvestment, okay, because I want my investment portfolio to grow faster. Okay, final tip is number 5. Stick to your investments goal. Stick to your investments goal. Do not constantly trade in your portfolio by buying and selling, buying and selling. Remember, you are investing for a long run. Other than annual adjustments, periodic rebalancing and adjusting if you have a major life-changing event, maybe marriage, maybe any kind of life-changing event, don't deviate much from your investment plan, because sticking to a plan will keep you from making emotional investing decisions. So set a goal for how much you want to invest per year and decide how much you want to contribute toward your investments monthly. That's part of my money mapping approach that I teach to my clients. And here's the bottom line. If you apply these 5 tips to your investing, you will be able to grow your money while you sleep with less stress and less risk. Now, I realize that these 5 tips may seem daunting, maybe at first to some of you, and you may be thinking, it's easier said than done. If you want to be a successful strategic investor, you can download my Beginner Investor Toolkit, as I mentioned earlier, at giftfrommillion.com, and just go through this and learn how to start investing strategically. But that's not all. I'm currently interviewing people for my new Inner Circle Investing Mastermind called, I already have a name, Women Gone Wealthy. My intention for this mastermind is to get you ready for the market opportunities that I believe will come later this year, so that you will make your money work for you, right? So if you want to learn how to invest strategically and, more importantly, how to apply your knowledge in a supportive and friendly mentorship container, let's connect. You can schedule your strategy session with me at speakwithmillion.com, and let's see if this brand new investing mastermind is the best choice for you right now. That's all I have for today. Thank you very much for watching my show, for your time, for your attention, for your support. Look forward to speaking with you soon. To your health, wealth, and freedom.